The Mag 7's breaking, interest rates are holding, and for once, SpaceX isn't imploding. All of that on the backdrop of a potential Hormuz deal and mega earnings coming up next week. Let's talk about it. Now, it looks like we finally understand what this Federal Reserve under Kevin Warsh is going to look like, because if you know anything about his past, it's not quite surprising. Well, it's probably surprising to one of us, but it's not that surprising that he is very hawkish on the economy. And his opening statements last month indicated that, but this month it seems like a confirmation of it. The odds of an interest rate hike are only getting better and better, and the only reason I could see in the future that it might not happen, well, it's Hormuz. Now, when it comes to statements from the president, I don't just take them with a pinch of salt. I take them with a spoonful of it. Cue the funny Vine spoonful thing. But at the same time, conditions have only gotten worse. Midterms are coming up really soon, and if Republicans want to keep the Senate, they need a deal on the table now. During the original peace agreement, Trump's approval rating noticeably went up, and that's due to increased confidence in the economy, lowering gas prices, and then it just went all to shit again. Now, even if we do see a peace deal come together next week, we're still gonna have to deal with high oil prices because traffic through the strait is still gonna have to take months, maybe even years to return to normal levels. And then on top of that, we're gonna see every major economy start to buy oil on the open market because they've drained most of their reserves and are currently sitting in critical levels. But fuck all that. We're at all-time highs, baby! But you know who isn't at an all-time high? I don't know why I said that, like they're all falling off. It's really just Meta and Tesla. Zuckerberg continues to dump billions of dollars into AI just to finish outside of the top 5 in every single category. And I mean, for Tesla, it's just... Somebody tell Elon to put down the cup. He's not him. He's not him. It's not gonna happen. Declining sales everywhere. Declining sales everywhere. And the solution is to build robots and set up data centers. I don't know how it's gonna happen. I don't know how it's gonna happen. They're gonna merge the companies. They're gonna merge the companies. They're gonna merge the companies. They're gonna merge the company. SpaceX actually had a pretty good earnings. Well, not not good, but now the bigger underlying story with SpaceX is the lockup periods expiring for the insiders that currently hold stock in the company. Now, we're not just dealing with investors, we're dealing with literal rocket scientists. So if more supply is coming onto the market, then there is demand to meet it. I feel like they would understand that this is the time to sell, to get out and cash in the chips in the casino while the money is still good. And as we go through more and more lockup periods, we're gonna have to see whether or not these insiders are gonna get cold feet and sell or hold like they're currently holding right now. And if they're holding, that realistically means that the stock is going to continue to pump as more and more people fund their 401ks, which then go into QQQ and then go into Tesla stock. Company losing billions of dollars is worth almost $2 trillion. Supermicro reports on Tuesday, which is going to be interesting to say the least. But the big reports coming out next week are from CoreWeave and Nebius, which are coming out on Tuesday and then Wednesday. I think these two stocks are the biggest indicators into the health of the AI industry. Now, it looks like both of these companies are going to lose money. Losing money in this market right now is not the issue. The issue that analysts are going to be looking at is how big is their backlog and has it grown significantly enough to justify the loss. These are pure AI stories dependent on the backlog. If you do not see a good backlog, you are not going to see a good company return. I don't see a reason that these companies cannot beat and raise. The problem is, how are they going to beat and raise? If their company only works because they're dependent on one or two players, well, that could be a bad sign. I promise to give you $1 billion. Okay, but you don't have $1 billion. That's correct. So how are you going to give me $1 billion? That's a good ass question. Current estimates on the CPI this month are currently estimated to tick up about 0.3%, which isn't really surprising considering the fact that we're still at war. We did see a negative jobs report, so couple that with rising inflation, it's not looking great. The CPI report is always important, but I think it's now more important-er because this is really the deciding factor on whether or not interest rates are going to be hiked next month. If it runs cooler than expected, great. If it runs hotter than expected, oh man, it's gonna be bad times. At least for like a week until shit pumps again. Anyway, that's it. Thanks for watching. Don't really have much else to say. Bye.